Welcome back to Trading Insight Today, your go-to place for mastering trading strategies. Today, we are diving deep into one of the most powerful and widely used tools in technical analysis, the Fibonacci retracement tool. Ever wondered why certain price levels act as strong support and resistance? Want to know how pro traders use Fibonacci to enter trades at the perfect moment? Curious about how to apply Fibonacci in a live market setup? Well, stay with me till the end of this video because I'm not only going to explain Fibonacci from scratch, but I'll also show you how to use it step by step in real-time market conditions. Before we begin, if you're new here, make sure to hit that subscribe button, give this video a thumbs up, and turn on the notification bell so you don't miss out on future trading strategies. Let's get started. What is Fibonacci retracement? Alright, let's start with the basics. What exactly is Fibonacci retracement? Fibonacci retracement is a tool that traders use to identify potential support and resistance levels based on a special number sequence known as the Fibonacci sequence. This sequence looks like this: 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89. And it keeps going. Each number is the sum of the two previous numbers. Now, you may wonder, how does this relate to trading? Well, when we take ratios from these numbers, we get important retracement levels used by traders worldwide. 23.6%, weak retracement level, minor pullbacks. 38.2%, first strong level of retracement. 50%, a psychological level, though not part of Fibonacci. 61.8%, the golden ratio, highly significant for reversals. 78.6%, deeper retracement level, used for strong reversals. These levels help us predict where price might reverse or continue in a trend. Why Fibonacci works in trading? Now, why does Fibonacci actually work? The reason is market psychology. Trading is driven by millions of traders who follow technical patterns. When many traders use the same Fibonacci levels, they act as self-fulfilling prophecies. Price respects these zones, bouncing off them as support or resistance. Example: let's say a stock is in an uptrend and starts to pull back. Many traders will look at Fibonacci retracement levels to decide where to buy again. If the price retraces to 61.8%, many traders enter buy positions, causing the price to bounce back up. How to use Fibonacci retracement in the live market? Alright, now let's talk about how to use the Fibonacci retracement tool step by step in the live market. Step 1. Identify a clear trend. The Fibonacci tool works best in trending markets, either an uptrend or a downtrend. Avoid using Fibonacci in choppy, sideways markets. Step 2. Select swing high and swing low. In an uptrend, draw Fibonacci from the most recent swing low to swing high. In a downtrend, draw Fibonacci from swing high to swing low. Step 3. Analyze the key Fibonacci levels. The price often retraces to 38.2%, 50%, or 61.8% before continuing in the original trend. Look for bullish price action, candlestick patterns, at these levels in an uptrend and bearish patterns in a downtrend. Step 4. Confirm with other indicators. Don't rely only on Fibonacci. Combine it with moving averages. If a 200 EMA aligns with 61.8%, it's a strong signal. RSI, Relative Strength Index. If RSI is oversold at Fibonacci support, it strengthens the buy signal. MACD, Moving Average Convergence Divergence, check for trend reversals. Candlestick patterns, look for doji, engulfing, or pin bar formations *** at key Fibonacci levels. Fibonacci trading strategies. Now that you know how to plot Fibonacci levels, let's go over some trading strategies that use Fibonacci retracement effectively. Strategy 1. Trend Continuation Setup. If the market is in a strong uptrend, wait for a pullback to 38.2% or 50% Fibonacci retracement level. Look for bullish confirmation, such as a bullish engulfing candle, and enter the trade with a stop-loss below the swing low. Target previous swing high or 1.618 extension level for profit taking. Strategy 2, Fibonacci confluence trading. Combine Fibonacci with trend lines, support/resistance, and moving averages. If multiple indicators align at a Fibonacci level, it increases the probability of a strong move. Strategy 3, breakout and retest strategy. If the price breaks a key Fibonacci level, wait for a retest before entering a trade. Use this with trend continuation patterns like flags and pennants. Live market example. Enough of theory, let's apply Fibonacci in a real market. As you can see, the price retraced exactly to 61.8%, found strong support, and then reversed back up. This is why Fibonacci retracement is so powerful. It helps us pinpoint entry and exit points with precision. And that's a wrap, traders. We covered what Fibonacci retracement is, why it works in trading, how to use Fibonacci step by step, proven Fibonacci trading strategies, a live market example. If you found this video helpful, smash that like button, subscribe to Trading Insight today, and turn on notifications so you never miss an update.